Hi, in this video, I'm going to talk about how to calculate the AMT, the alternative minimum tax. So you can see this, you can call it a formula for the individual AMT. The individual, I have a little note here, is include all those entities, not just the means for the individual taxpayer. So let's see the process. First, you start with the taxable income. The taxable income is your regular taxable income. You can find your 1040 line 15. That's your taxable income. Then you plus the tax preferences. So those are the list of the things given by IRS. So we don't need to go to detail right now. Then you plus the standard deduction if used. If you did not use the itemized deduction, you use the standard deduction. You have to add the standard deduction back. So this is the standard deduction. Then you there's something called AMT adjustment. There are many adjustments. So you we'll talk about in other videos. So now this here. So you just have to know those adjustments you can add or subtract from it. So once you have all those things done, then you will get an alternative minimum taxable income, which is AMT income. Once you have this AMT income, then you can deduct the exemption amount from it. So you minus the exemption amount. So how much is the exemption? Those are those exemption amount. They are adjusted each year. In the year 2021, so based on your filing status, those other exemption amount. Let's say you are single. The exemption amount is 73,600. So, however, this amount will be phased out if your AMT income is greater than $523,600. So how those things works? Say it's 25% phased out for the excess over. So let's say you have $10,000 over this amount. So then the $10,000 you apply to the 50%, 25% of the $10,000 give you $2,500. Then you will deduct the $2,500 from this amount. So we'll reduce your exemption amount. So based on this calculation, you will get a cap, which means say if your AMT income is greater than $818,000, you will not eligible for any exemption. So basically, is that mean that for the married filed jointly, your exemption amount is $114,600 in 2021. So your start phasing out is your phasing out amount start. Then your cap is everything. If you have a AMT income is greater than is $1,505,600, then you will not have any exemption amount for if you married file jointly. So basically that's how that works. Once you deduct the exemption amount, you will get your alternative minimum tax base, which is AMT base. So then once you have the base, you can apply the AMT rates. AMT rates is for married file jointly, single, or head of the household. So if your AMT base amount is greater than this amount, but anything below this amount which is in 2021 is $199,900. So if anything below this, you use the rate 26%. Anything above this, you use the rate 28%. So once you apply this rate, so for the merit file separately, you have a different amount here. Anyway, so after you apply this rate, you will get the tax amount. Those tax called a tentative minimum tax. So you compare the those tentative minimum tax with your regular income tax. If you choose the higher amount as your tax, you choose a higher amount to report to IRS. So basically, it's like that. So if you also can do this side, if you use the tentative minimum tax minus your regular income tax, if you will get the alternative minimum tax. So AMT, if it's a positive amount, so you have to report your regular tax plus the AMT amount. So if your AMT is a negative amount, then you just report your regular income tax.